morning and welcome to Saxo Bank's Market Call, broadcast live from Copenhagen, Denmark. Today is Tuesday, 26th of February. Begin our presentation with the overnight news bullets. Actually, there were relatively few economic data releases yesterday, few that are really worth mentioning. We had the Swedish trade balance for the month of January, surprising the markets on the upside, coming at 9.6 billion euros versus 9.5 billion that was expected by the markets. Another interesting information or news release was from Central Bank of Hungary, which kept its interest rates at 7.50%. This was generally expected, although there was an offside chance of a 50 basis points hike. However, they announced at the same time that they would be scrapping off the Euro-Swiss, Euro-half trading band that has been so far in effect, and this was immediately followed by a rapid Hungarian forint appreciation, but much of the appreciation that the Hungarian forint registered was already given back by the end of the trading day. Later in the American session, we had the U.S. existing home sales for the month of January, also surprising on the upside, coming out at 4.89 million, whereas the market's expected figure was at 4.80 million. And that really wraps up the overnight news bullets, as there were very few indeed. On the market, the Aussie dollar is higher in overnight trading. In the Asian session, Aussie dollar was testing 93 cents. Euro dollar has been pretty range bound in the past 2 trading days. We would need to see a decisive break of 148.60 for a more protracted upside for the pair to open up. On the equity side, we had broad gains in the U.S. session. This was primarily on the news of monoliner rating news. Dow Jones ended the day 1.53% higher, and S&P also up by more than 1%. In the Asian session, we had somewhat of a mixed results, with Nikkei down by 0.65% and Hang Seng trading up by about 1.39%. On the fixed income markets, treasuries are higher. They're basically pricing in bad or disappointing consumer confidence report figures later today. At the same time, JGBs are advancing. They're advancing on both falling Japanese equities as well as with higher auction demand. There was a 20-year note or 20-year bond auction yesterday in Japan, which was received with very high demand. So that's been pushing the JGBs considerably higher. Bunds are trading in a tight range and are little changed on Tuesday's trading. On the commodity markets, interesting development with wheat prices, as we are seeing the wheat for the first time about $12 a bushel. This is now a record high, and is primarily on the news that the global crop production is not sufficient to meet the global demand. Gold is lower in Asian trading, and this is primarily on the news that the U.S. has pledged to support the IMF bullion sales. Spot gold is now trading around $931.80 an ounce. So what's going on in the marketplace? Well, we had obviously important news from S&P on the ratings of the monoliners, in other words, the bond insurance companies. The news were somewhat mixed. 2 of the world's largest bond insurers, namely MBIA and AMBAC, actually managed to keep their AAA ratings, but at the same time, both Excel Capital as well as FGIC both suffered rate cuts. The rate cut for Excel Capital was actually from AAA to A-, so that was a very, very drastic rate cut indeed. And at the same time, MBIA was out with news that for a 6-month period they would stop writing protection on the riskier asset-backed securities, and this was again highlighting the difficult position that they're in. Also, the plan is that in the next 5-year period, the company would separate its 2 businesses along the lines of municipal bond insurance and asset-backed security insurance. Also adding to these mixed news was the news that both Goldman Sachs and Lehman Brothers might be next online to suffer from write-down losses. In particular, the news is now focusing on the potential write-down losses from variable interest rate entities, which basically allow these financial companies to take some of their credit exposure off their balance sheets, and the figure that is now being speculated upon is about $11 billion in write-downs for Goldman Sachs alone. So it is indeed a considerably large figure, since Goldman Sachs has not come out with any write-down announcements so far. We've already touched upon the wheat prices. They are now basically at a 5-year high, with the prices now trading about $12 a bushel, in a sign that the global crop production is indeed not quite sufficient to meet the demand. Today's calendar is actually very, very rich in economic items that will be released. We have ECB's Weber speaking in Paris, and this is at 11 o'clock GMT. Later in the day, we have US PPI figures being released. This is at 1:30 GMT. Followed right after this, at 2 p.m. GMT, we have S&P Case-Shiller house price as well as composite figures being released. So tune in for those figures. Very important in the sense that will give us more fundamental direction as to where the housing markets are in the U.S. Later in the day, we have Richmond Fed Manufacturing Index figures being released for the month of February. This is at 15 o'clock GMT, as well as Fed's speaking on economy and monetary policy in North Carolina. This is at 5:15 p.m., again GMT time, of course. Some coming highlights on the economic calendar. We have the U.S. durable goods orders as well as the new home sales. This is out tomorrow on Wednesday. On Thursday, we have the German unemployment rate as well as the Swedish current account figures being released, and later on Thursday in the American session we have the American GDP annualized figures as well as personal consumption, GDP price index, and core PCE figures. So very, very important data releases indeed in terms of the US markets. Our recommended trading strategy, FX trading strategy for the day is in Euro Swiss. On the spot side, we are looking to sell the spot at a break of 161.39. This is a critical pivot level. So we are sellers below this, or at the break of this level. We are targeting a below support line at 160.70 to 160.80, and we are keeping a tight stop at 161.66. At the same time, we are observing that the 1-month volatilities in Euro Swiss are very high, giving the traders opportunity to sell put as well as call options, depending, of course, on the traders' market view. So keep an eye on those volatilities and look to sell options on Euro Swiss as long as the volatilities are indeed this high. On the equity side, our recommended strategy for the day is in the French bank BNP Paribas. BNP Paribas has actually had a very nice bullish run earlier this week, as the financial sector has indeed been boosted by S&P's rating news. However, we are seeing the BNP Paribas prices as overextended, and our short-term indicators are telling that it is time to sell the stock. So we are indeed selling the stock at 64 to 65 euros. This is our entry range with an initial target at 58 euros, and we are keeping a stop loss at 69 euros and 80 cents. Finally, on the futures market, if you indeed take the equity trade that I have just mentioned, somewhat of a hedge against this short in BNP Paribas, we have a recommendation to buy into S&P 500 if we are breaking over into the 1400 area. So we are buyers in 1365 to 1368 area with a target into that critical 1400 level, and we are keeping a very, very tight stop loss at 1362 points. That is it for me today. Thank you very much for joining us. See you again tomorrow. Bye-bye.